Hello, YouTube. Is it time to sell everything? We have a massive bearish engulfing candle after some economic data, but we are down for the reason you might not think. We actually had the BOJ come out during the day and tell us that they're potentially looking at taking away their yield curve control to allow rates to actually go more than zero. Fear came back into the market. We went as high as 82 down to 77, and we're settling here at about 78. This is very important because we had the move going into today. We had the seasonality chart move, but here's the problem. We only care about a line chart on this pattern. So what does that mean? Well, let's look here to a line chart. Let's look and see whether or not this looks bullish or bearish, or if maybe we just don't really know what the data means we're looking at. So when we look here, it just looks like bounce off the uptrend, bounce off the uptrend, bounce off the uptrend, bounce off 251, and then bounce off 251. Where? Right on support. This is not the only chart that looks like that either. We look over here to QQQ or the Qs, and what do we know? Well, we're right on the uptrend, right? We're a little bit below it, right? We can argue that we're above, we're below. We'll see what happens tomorrow. But if we go to a line chart, what happens? Looks like we're right on it again. Where same thing. Bounce, 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 bounce. Every time we've hit the uptrend, it's bounced. It does not mean it's going to continue. Volume's creeping in a little bit. But what I would note is that until we get a trend change, there is no new information for us. So if we understand the headline that happened, I think today's a really good time to check in and see whether or not anything has materially changed on the chart. Because the reason why I put in the title, it might be time to sell everything, is because, well, we're landing on strong support. And I know what you guys are thinking. What do you mean sell everything? Well, the average person loves to sell as soon as markets start going straight up. What does that mean? As soon as we start curling lower, they want to sell. They want to sell right into the strong support. And that's the predicament we're in right now. We're on support. Maybe in the morning you're feeling a little bit greedy. What's the saying? Gap ups are for selling. Oh, that's right. Gap ups are for selling. And I'll tell you the telltale clue that I noticed this morning before we go further, that maybe we weren't going to go higher. We note here that we had a pre-market high of 459.55. Then our cash market high is 459.44. So if all we're doing is looking at the daily chart, we're just going to see that 0.44 is our high of the day. And that's because we're not including pre-market action. Most days there's not a lot of pre-market action, but today there was. So that's why sometimes when we look at ES versus SPY, we see a different pattern. So here we note that we have a higher high at 46334. And then looking at that hourly chart, what do we note? Well, it looks like a lower high. Yes, exactly. That's what it looks like. And then right here is where we have that big, nasty headline from the BOJ, right? The big, bad BOJ. So we heard from the ECB, we heard from GDP, we had initial jobless claims, core durable goods, pending home sales, and they're all beats, all green numbers. So that's what was really interesting. We actually held up for a long time on the market before we actually sold off. So when we look here to a 15-minute chart, we tried to actually base over yesterday's high in the morning here, right? Come down, dead cat bounce, news crosses, slam it down, and then just continuation lower. And if you note the little blue line down here, what is that? That's that 78% retracement we're looking at. So we look back here at our daily chart. I have a big line. It's the only line on the chart. It's 45176. It's the 78% Fibonacci area. What does that mean? We crash landed on strong support. So what do? Well, we could go up, we could go sideways, or we could go down. So let's try to make sure we understand what that would mean, because there's two really important dates as we go into the end of the month now. There's tomorrow. So tomorrow, let's just delete everything here. There's going to be the 28th. That's going to be the last calendar day of the week, which means this candle is going to close out. This weekly candle is going to close. And then we have the first, then we have the 31st, which is going to be on Monday. And that'll be where we close out the monthly candle. So this monthly candle here is going to close out on the 31st or on Monday. So going into last month, we had the close of the week, the month, the quarter, all on the same time. This time we're not. We're going to see different candle closes on different days. We're going to have tomorrow and Monday. And I'm going to ask you for a huge favor before we go through here. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. And we thank you we thank all of our new subscribers. We really appreciate all of your support. All right, let's go forward here. So if you look at the weekly chart, there's two things I've been trying to primarily focus on so we can make it really simple. And then we also have the added thing for here from the weekend. Uh-oh, what's going on here? I had this issue before. Come on, paintbrush. No, it doesn't want a paintbrush. So what I'll do is actually go over here. I'll refresh the page and try to fix it. And then we'll just read through these different numbers here to try to get a grasp on exactly where we are going. Let me just make sure this is working now. Yeah, it's working. Okay, let me see if I can bring it back. Sorry about that. All right, we're recording live, right? We want to bring you the information as soon as possible. What was I just talking about? All right, here we go. Weekly chart. Let's go to the weekly. Let's read the note. And let's see whether or not there's any warnings. So the other note was just we have this thing highlighted here in yellow and a question mark, meaning I don't know what's going to happen. I think it's up. So far, everything says up, but we don't have the confirmation yet. So hollow candle signal the expansion is continuing. That's the first part. What do we have here? Well, we're opening at 453.37, and we're currently at 453-ish in post or after hours here. So all that means is that the after hours is currently roughly 253, but on a close, we're about $1 lower. What does that mean? We have a full candle. We don't have a hollow candle as of right now. If we're green tomorrow, likelihood is that we will. But if we close red tomorrow, we don't have a hollow candle. So we're not sure if this expansion is continuing. Again, stocks go up, they can go sideways, or they can go down. So the first clue of us going sideways is that we're no longer going up. We're no longer expanding. There's no longer an expansion. That's the first thing. Second thing is we form a lower low. Lower low is a warning. It is not confirmation. We need a trend change by having at least 3 candles so we can see high, lower high, and low, low, period. There's no trend change unless we see at least 3 candles. So 1 lower low would be a warning. 2 lower lows is like, okay, yellow flag, then we got a red flag, then it's like, okay, well, we're probably wrong. So on the weekly chart, there's the potential for a hollow candle. There's the potential for a lower low. But so far, I just see a little bit of a breather. We have an upper wick, which could signal a inverted hammer if we close like this tomorrow, which is a failed breakout on the weekly. Cool. Now let's look at the monthly to see the same thing here. We're just going to spend a minute on here because it's very obvious that it's going to be a hollow candle unless we go red in the month or drop another 2% to be below 444. So as long as we're above 444 on a monthly close going into Monday next week, perfect. We look here at the weekly, to be determined. I'm not sure, right? I got a question mark because this week I was actually a little bit less sure. But as we're looking at the fallout here, what's excellent about the news we got today is that if we're trying to figure out where support is, because stocks usually take the staircase up and then the elevator down. Well, as we're going down, you're not sure if that's going to be a dip, right? That's why we form higher lows because you're not sure. In hindsight, you'll know whether or not it was a nice dip to buy, right? We form those higher highs, or if you try to catch the knife and now the market's just going straight down. So what we want to do is just figure out whether or not we're finding buyers where we would expect them to, and if the market is genuinely surprised. I think this was a surprise because the BOJ does not talk until tomorrow at 2 a.m. Eastern. And then we got that big core PCE number, which we will talk about in a moment here. But just trying to understand this. This is like a company pre-announcing their earnings. This is the Bank of Japan, one of the G7 countries, telling us that we're pre-announcing a plan here. Don't be so surprised if tomorrow we decide to announce this. Market tanked on it. And the good news is that we're going to find out whether or not the market is going to continue to repeat the pattern, which it has been so far, which just means up into the end of the month, up into July 31st. A little bit of a retracement that would form a monthly lower low. And then we form basically a doji here. We open and close at about the same price. Nothing happens in August. Cool. Let's take the month off. Let's go enjoy the summer and the sunshine, right? That's the plan. And I showed this on the weekend. I talked about it as well. We've not seen that breakout on fear and greed yet. So fear is coming back in a little bit, meaning we're a little bit less super extreme mega bull, meaning we were at 82. Now we're down at 78. So it is coming out a little bit. It's still just a higher low. We'd have to go below 75 to crack that extreme greed going back into greed. So the threshold here is 75. So as long as we're inside of extreme greed, it could be the low. I want to make sure that if we're squeezing based on CFTC short data, basically the short sellers who are coming in here, beautiful background, right? Wow, Switzerland is beautiful. Anyways, we look here to the short positionings. Normally, this is the part where they just go net long. So they're still fighting it. The bears are still fighting. So if we're squeezing these bears, we want to make sure that we're just aware of what is happening here. If we start going lower and lower, it means the bears are feeling really scared, more likely going to cover. If we start ticking down, they're going to get more confident. We'll get that print just after the market close tomorrow as well. So if we look here to today, here's the part that's interesting. We look at the 1 day, it's pretty equally red. But now let's look at the 4 hour because it's also interesting to know what happened in the afternoon. Pretty red. Yes. So that means that there was something that happened not overnight into the open for the first 4 hours, but into lunch, into the close, something happened. That's the BOJ. So we looked at that. Now, if we zoom out here to a 1 week, hey, it doesn't look all that bad. It looks like there was a rebalancing, right? Okay, that makes sense. Microsoft, Amazon, Tesla, okay, they rebalanced. Otherwise, it's mixed. But if we zoom out to a 1 month, this is looking pretty nice. In the last 30 days, for me, what I notice is if there is a rebalancing in the last 30 days, well, Microsoft's flat after earnings, Amazon's flat, Google up 10, Nvidia up 12, Apple up 4, even with whatever happened today. So we're on support. Most stocks have gone higher in the last 30 days, or that 1 month candle we just showed you. Why? Well, because the S&P is up. It's forming a cup and handle here. It's a hollow candle over the previous candle high, which means something dragged it up. We're seeing other groups participate, like banks, like healthcare a little bit, right? Like most other blocks. So for the reason why I point this out is because this to me does not look like rotation. Rotation means selling something to go buy something. This to me just looks like people want to buy everything. So because they're willing to buy everything, S&P SPY is a good representation of the cap weighted, or basically meaning the bigger the block, the more it moves by. RSP just means we don't care what company you are. We equal weight every single one. And if we look here to RSP, it's currently up by about 2.67 on the month, where SPY is up by about 2.08. So RSP is actually outperforming. That's not normal, right? So is it time to sell everything? Well, people appear to be ready to buy everything. So I know I put a title that you might have clicked on, or you might not have clicked on otherwise. I hope you got some value in here. And what that really means is I think it's important for us to look at different patterns to try to make sure we understand what's going on here. So here's a weekly chart on RSP. And there was the potential for a, let's just go here. Let's grab the magnet. Let's grab a horizontal ray. Here we go, horizontal line. Let's snap it on that potential head and shoulders. Let me go here to the, let's go back to the brush. Oops, there's the brush. There we go. Remove the magnet. There was the potential for a head and shoulders here, and it got back over, and it's actually back testing the previous resistance. So because it's back testing the previous resistance, I would say this is support. So again, you're probably feeling like, oh my God, what have I done in the past that I've always regretted? Selling on support? That's right. Look at the bullish volume here too. So I hope I don't eat some humble pie tomorrow. I've made some trades based on what I'm seeing set up here. And if you want to join us, great. There's a 14-day free trial. I put on some trades today. I think 2 new positions. And you can see what those are. If not, I'll just walk you through a few more quick things here to try to get you ready for tomorrow. And we will be on for the final hour. So come prepared with your questions. We will have that live stream for you. So it's crazy what can happen within one day. We showed you the bullish levels on SPY yesterday. They were 100 because we were at a fresh 52-week high. But with a bearish engulfing daily candle now, we got to be mindful of things. Here we're looking at the last month to date. So here we're looking at dark pool and lit pool prints from July 1 to July 27, which is today. And this is important because there's been $2 trillion transacted in the last 27 days in lit pools, and then $838 billion in dark pools. These are orders including $10 billion for Nvidia, $10 billion for Nvidia, $9 billion Microsoft, $9 billion Microsoft, $6 billion Amazon. These are fat orders. These are big numbers. And the reason it matters is because we can find out if we have more support or resistance, or like some kind of VWAP, right? Volume weighted adjusted price. Yesterday on the levels, we showed you that they were up by about $1.6 billion. And here we go. Let's get the number. It should update here. There's just a lot of orders for it to go through, so we'll see what it does here. It should, I checked it before, it was at 1 billion in profit. Oh, there we go. The number's criming. Oh, crime number. Yeah, go big times. All right, go big booms. 400 million, 700 million. We got 800 million, a billion. There you go. 1.2 billion. Oh my goodness. Okay, so they gave back some profit. Yep. And yesterday, 100% of levels were bullish. So at 452.94 close, or maybe in post market right now, what this is counting is going to be that 70% of the levels above are unprofitable. So if you bought this, you're losing money. But everything below, they're still crushing it. They gave out $400 million in profit today, but they're still up 1.2 bill. So what are they going to do? Well, most levels here still support. We can analyze this dark pool data more if you guys want. It's just a different way of trying to thinking about where support is. And now as we focus on the big number tomorrow, we're going to be looking here to what the Fed is projecting. So the Fed's summary of economic projections from the last meeting, we'll get a new one in September. And that's what Jerome said. We're data dependent. So we better make sure we know what data he's looking at and how we should be interpreting it. So they're telling us that the 2023 average for PCE is going to be 3.2. And then core PCE is going to be 3.9. So that's how we can go to their rate, and then 2.6 going into next year. So I want to focus on these two because it's what the Fed considers to be restrictive monetary policy. And I have one more screenshot here I think I want to pull up because there's more than one way to think about before we look at those PCEs. This is from Bloomberg. Right? I find their channel to be more reputable than some others, so I just like going here. And what we can notice that the white line basically just means the U.S. stands out with positive real policy rates. And what that talks about is that right now the real Fed funds rate is above the CPI print by 250 basis points. So compared to the rest of the world, like part of the reason why we saw the dollar rip today, which tanked stocks, and it was a really big red flag this morning. Okay, dollar's up, S&P's up, something's funky. So we note here that that's what happened, right? The dollar is really restrictive compared to other currencies. The ECB raised today, but they're still only at 3 point something. The Fed is at 5 point something. So that's like a lot different. They're currently here at 375, right? ECB deposit rate is 4.25. The Fed's still higher. So we are technically restrictive right now. As we look forward here to this number, the only way we can average 3.9 into the full year, because that's what they're telling us here, right? 3.9 for core is if the first half of the year and the second half of the year average out. So if for the pretend going back here to roughly January, it's 5 and then 4.7, let's call it 4.7. So for us to get to 3.9, we're going to need some numbers down here at 4. So tomorrow could be the first evidence that we're on a path down to 4.2. Why? Well, because here we note that we're at 4.7, right? We just look here, right? It's flatlining. It hasn't gone down. 4.2 would be the lowest reading going all the way back to 2021, right? Headline, oh my God, lowest PCE since 2021. What do you think would happen? Well, I think I know what would happen. Up. That's what I think would happen. And then if we look here to the core number, it would, if it comes in with the forecast, or if it comes in with a beat, I think that would be interpreted bullish. I could be wrong. But when I look here, I'm like, okay, well, how do we get to 3.9, which is what Jerome said? And he's like, you basically told us if the numbers come in, which can support our current SEP, or summary of economic projections, we don't have to do more. I'm ready to do nothing. But if they come in hot, I'm ready to do more. I'm ready to pause. I'm ready to hike. Well, if this number comes in at 4.2, he's finally going to get that sweet, sweet relief he's been hoping for, that soft landing. But he's not going to turn into Burns. He's going to turn into, what's his name, Volcker. So that's what he wants. He wants to kill inflation. Well, the only way that happens is if we're here. And we're still noting that they're looking for real GDP in the full year. So that's interesting. Might get a revision there. But anyways, there's been a lot of information here. And if you clicked on the video and you're still watching, you want to hear a bearish story, I'll leave you with the weekend video from 2 weeks ago, where we left you with a very bearish story, where we said it's time to go down, down, down. So that is the bear narrative. If not, I look forward to seeing you guys for the end of day video, end of day stream tomorrow. Thank you again, and I'll see you on the next one.